So I want to show you how you can dollar cost average on M1 Finance. So if you don't know how to do that and you're curious how it works, today I'm going to show you how to do that. Now, in case you're new here, my name is Dennis, and I love talking about financial apps and services that help you build wealth. And especially on M1 Finance, it's the platform I love to use. So let's go ahead and jump on the portfolio and start talking about this dollar cost average and how to also find the best values into your portfolio directly on the platform. So what I wanted to kind of talk a little bit about today was, with the market that was going up and down a lot, I was dollar cost averaging quite a bit on my portfolio. And if you're not familiar with that, dollar cost average is where, you have a price that you paid for a stock and maybe the stock went down in price, so you buy more of it, effectively making your overall costs on that go down. And M1 Finance does this pretty well here. So if we go into our tech, for example, we can look at AT&T here. So this stock right over here is one that I own. And so right now I have 7.30 shares in the company. So you can see here my average share price is $31.39, and the current market price is $28.79. So effectively, if I buy into this company, I will actually lower my average share price. So that means I'm essentially getting more value for every share that I'm buying. And then of course, if they pay out those dividends, I'll be getting those too. But I actually wanted to show you how to find out this stuff a little easier rather than going into each pie and then each stock itself. So if you have multiple stocks, this is going to be a lot easier. Let's go into our holdings. Right over here, you can see I currently have 36 holdings. And then right now what they do is they actually set it up by value. So this way you can see how much you actually have in each one based off of the current pricing at the end of that given day. But what we can do here to make this really quick for us, we can click on unrealized gains here on the right side. And what this is going to do is it's going to categorize everything based off of the actual dollar amount, not necessarily the percentage. So you're going to see how some of these percentages are kind of jumping back and forth. So this is based off of the dollar amount. So based off of what you already have invested in and essentially what you're down in currently. Obviously it's unrealized because we haven't sold anything yet. So right over here, we can see that the worst performing stock in this portfolio is NRZ. I do know a lot of you guys have this in your portfolio as well too. Let me know in the comments if you are holding NRZ as well. I plan on holding them as well. Now here you can see I'm actually down 34.96% based off of what I put in. And then you can see AT&T is down 8.29%. So fairly similar to the information I got on the AT&T's page individually, but this one actually allows me to see it in a whole altogether with all of my investments. So what I can do effectively is if I'm, trying to figure out where is my dollar best at in my portfolio with stocks that I already like and I already want to continue to invest in, if I put my money into these stocks, they are already lower than my initial purchase price or the overall cost that I already paid for them. So putting money into these will lower my average share price, which helps me dollar cost average. And it's a really quick way to do it here on M1 Finance. I'm pretty sure there's ways to do this on a lot of other investing platforms, but I just found this to be very effective for me. So over the last couple of weeks, when the markets were kind of fluctuating a lot, what I was doing was coming in here and seeing where my money would be best at. And one great example of this was with Discover. So let me just actually jump this up in alphabetical order. So Discover right now, I am up currently 5.06%. So I'm up $9.52 on this stock. Now you can see I have about 5 shares of this stock. And then right now, if we actually go in here and look, so over the last 3 months, of course, it's gone down. It was at its peak around February 20th. It was 75.79. That wasn't its peak, but just in the last 3 months it was. And of course, you can see here, it dropped pretty dramatically. Went all the way as low as 25.25. I think that was its lowest point in the last 3 months. Now, for me, when I actually originally bought it into this stock, I'm going to show you here so you can see this in real time. So we're going to go and DFS. We're going to type in Discover here. And I'm going to show you the original time I bought into Discover. So this was August 14th, 2019. I like Discover. I think they have some really interesting stuff coming out. So I wanted to invest in them. So I bought it at first at $3.03. I know that's not a lot of money for some people, but it's just getting started with those investments. You can see here, my average share price was $80.10. And then I bought pretty much almost 3.7% of a share. So based off of the quantity there. So you can see there, and then, you know, a couple weeks later when I'm doing my regular investments, I'm buying more, again, $80.44. A couple weeks later, you know, technically the price went down for the share, so it was at $78.51. So you could kind of get an understanding of what I was doing. I was starting my investment and then I was putting money in. But because of the way the market went, things obviously went pretty crazy. The prices dropped pretty immensely. So what I decided to do was, when I was going through and figuring out where do I want the majority of my money to go so I can get the best value for my money. Because at this point, I was down a pretty significant amount of money from where I originally bought into Discover. Because if you think about it, my original price point was around $80 and it dropped as low as $25. I mean, that right there is a huge loss of money if I were to, of course, sell. So I didn't sell. But instead, I saw the opportunity to buy more because I like the company. I still think that long term they're going to be, you know, really healthy. So on April 13th, I actually decided to put in $90 into this company. So $90 at the time, I was actually able to buy them at $36.16. So unfortunately, I did miss out that very bottom price, but of course, I got it at a really good price point in my eyes. So here it actually bought me 2.48 shares into the company. So what that did effectively was really lower my dollar cost average. And so that effectively helped me get more value out of this company. And then I did the same thing a couple days later, put another 20 bucks in. The price was even lower, got a couple more shares. And then I did that, you know, for a little bit longer. Of course, I slowed down after a while because the value of the stock started going up. And then I had opportunities to start putting my money in other areas into my portfolio. So after I started doing that, I still put a little bit, as you can see here, on the 20th of April, the 22nd, 23rd, 29th, and then the 30th. So I was putting smaller amounts, not as much as the initial $90 and then $20, but overall that really helped me lower that dollar cost average amount. So we can go back in to my financials here. And so we can see here, in total for this, I am up $9.74 like we saw earlier. And then from this screen over here, we can see that the average price actually came out to $37.25 for all my shares of Discover, where if I didn't dollar cost average, this number would be much higher, towards around the $79 to $80 price range. And since we averaged the share price down, you can see since we're at $37.25, the actual market price right now is $39.14, meaning that we are up that $9 and some change overall on the overall portfolio because we did that dollar cost average. So that for me has helped me essentially get my money back, because if I didn't buy anything else into Discover because I was like, hey, I'm just gonna hold at this point because it went down so much, and didn't dollar cost average, then I would still be negative in my portfolio with this fund. Now, if I want to, I can sell all this now and make that $9.74 into my overall portfolio and just get it reinvested. But I just see the value, of course, in still investing into this company because the price is still much lower than where they were in their 52-week high, and I still see some more opportunities. So with that being said, I can come back in here into the holdings and look at my unrealized gains and say, okay, where else do I have opportunity? Of course, NRZ, I've actually been dollar cost averaging quite a bit. I have about 15 shares with the average price of $9.39, and I think their price right now is around $6. So I could still be dollar cost averaging pretty heavily on this one if I wanted to as well. I got AT&T down 8%, Realty Income down about 10%, and then we got Ally Bank taking kind of a big hit right now, about almost 14% of their original price point from where I got them. So this gives me the opportunity to get some really good value in the companies that I already have invested in, did the research for, because if you're somebody who's like investing in the market and you realize that doing a lot of the research can take time, right? You gotta make sure that the information's correct. You gotta make sure that they kind of align with your risk tolerance. And then to go around and have to, redo all that research for new stocks can be really, cumbersome, versus where if you're already invested in these companies and you just see the values are under where you originally bought them from, that just gives you the opportunity to just start tossing in money and actually being able to essentially gain some really good value in the companies you already did that research for. So as I'm looking at these different companies that I still have some good opportunity to dollar cost average in, it looks like for me, I would say most likely I'm going to probably continue to dollar cost average into my Realty Income. I do really like them because right now their dividend yield is at least over 5%, if I'm not mistaken, at their current price point. And then they pay out a monthly dividend, in case you don't know. So that's what's really great about this company. That monthly dividend that they pay out, I can start reinvesting that money back into this portfolio overall. So that way I can continue to keep growing. So yeah, their dividend yield is 5.37, which is pretty nice at that price point. And I have about 3.3 shares currently. So if I keep buying into that company, I am going to, of course, dollar cost average, but then as well get more of my dividends faster. I have also been buying more into AT&T. And then I've also put in a little bit more into my NRZ. And again, any NRZ fans, let me know in the comments down below if you're here. I have been dollar cost averaging with them, although, because they did lower their dividend payout, it's not as advantageous for me to be investing in them. Now, hopefully they're going to come back, and hopefully they even reinstate their old dividend yield, because that would be really nice. And having as many shares as I do currently, it'll be really nice dividend payouts, because I do miss those payouts. They were really nice at 50 cents a pop. For what I was earning. I had them for about a year across the board between my M1 Finance account and my Robinhood account altogether. Now, those are going to be the ones that I most likely continue to invest in. I also am probably going to continue to invest in Aflac. I think they also pay a really solid dividend across the board and very healthy. They are a dividend king. If you're not familiar with that, that's where they actually have been paying out dividends for over 50 years with an increase every single year. So that's huge. And 3%, even though it's not as close as the 4% as we would like, 3% is still a really good payout. And then let me see where they are when it comes to their 5-year average growth. So let's take a look here. So I'm on Seeking Alpha. This is where I go and check out my scorecard. I love Seeking Alpha. They are not affiliated with me personally, but I do use them all the time, and I do recommend them because I think they're awesome. So this dividend scorecard here, you can see for me, what this is telling me is that, of course, the dividend yield is that 3.12%, but this is where I'm also paying attention to. So they have a 5-year growth rate of 7.57%. So that means that even if I just hold on to what I have now, that my increase in value is going to go up on average over 7.5% every single year. And their payout ratio is well below 60%, which is kind of my threshold there, which means that that's going to give them the opportunity to continue to increase their dividend without the worries of, going into either debt or having to cut the dividend. Because that's, like we talked about before, it's never a great thing for a dividend investor to get either a suspension on dividends or a cut altogether. Now, I want you to keep on learning and growing with M1 Finance, so check out my video tutorials right over here so you can keep on learning with the platform. Thank you so much for watching, and I will see you in that next video.